Hello, welcome back to Crash Labs. I am the ultimate captain for the day, CJ Kim. Glad to have my colleagues with me, Vincent and Josh. Today, we'll be hosting a special episode. We will be reviewing our Q2 2023 financials for month end June, right? 6 months.
That's right.
And, overall, we're fairly happy with the results, considering that the markets have not been the best. I think that's a fairly fair statement to say, right, boys?
Look, the sentiment in the market was not the greatest. From Quebec City, the conference that was there, you could see that people had trouble raising capital throughout.
Even in Quebec, eh?
Even in Quebec, yeah. Even in Quebec, the funds are there, but not as much as before. If you have a lithium play, sure, you can raise. But other than lithium right now, it's tough market.
How much of the issuers there were lithium? Quite a bunch, James?
Quite a bunch. Yeah, James Bay Lithium. Right now, there's lots.
A lot of pivots.
Lots of pivot. That's right. Exactly.
Yeah.
Lots of people that made money on the on staking during that rush.
Oh, I bet, eh? Okay, so I think really quickly, if we want to review what we've done as, I guess, a company as a whole and looking at our subsidiaries, let's bring up what we can see in the MD&A. And, I think we've got the outcome, or we've been performing what we wanted for CEO.ca, in that we want to continually build the foundations out to take advantage of when the markets do come back. And I think this is a narrative and vision that we've reiterated in the past, where, listen, right now, capital is hard to come by, but when the markets do turn around, capital is going to be very easy to obtain. And, it's up to everyone or investors to show issuers why they're value-added investors. And this can come in various forms, but the ultimate trump card is showing issuers that you have the distribution or the ability to get eyeballs on your story. And, it doesn't matter if you're a micro-cap company or, a large cap company. You need eyeballs on your story in order for your stock price to reflect what your intrinsic value is worth. And you can only do that by getting eyeballs. And I think a lot of people don't realize that these larger cap companies have the benefit of big banks behind them, where they have, the iBankers working for them, they have their sales and trading desk working for them, and they have research in terms of distribution. And, research arms their sales guys and institution guys with reports to hand out to investors and, try educate institutions and, in some cases, high net worth investors on why this stock price is undervalued. And, they're armed with all this research, and finally you can close that gap in value, versus microcap companies don't have the benefit of these large institutions working behind them, and they have to rely on, outlets such as CEO.ca or, traditional news writers to close that value gap. And in the end, all these issuers know, and all these issuers are fighting for these specific investors where they can bring as many eyeballs in on their stories. And, you have the magic name Eric Sprott that can do that with just his name in itself, or the Gentiles. And I think that's why he made such a push in getting his name in a lot of PRs where he's investing. And, Palisades Gold Corp did that as well when they were deploying capital a couple of years ago, in that, they want to be that marquee investor, because then all of a sudden, when people know that you have distribution and power behind your name, you're going to see these earlier deals. And deal flow is so important in our business, where you don't want to be the third or fourth check into a deal where the story is exhausted, or all the hype and initial euphoria is gone, and it becomes a very hard grind in that the issuer has to continually raise money and put it into the ground. You want to come into a place where a lot of that risk is mitigated through structure and being part of a new story, and being part of some fervor where a lot of that value is more easily recognized. And I think if you look at our numbers, where we're very fortunate where we have CEO putting that foundation in place of becoming this behemoth in distribution and getting eyeballs on stories. Digi Geo we're building out to do the same thing. But these are businesses as well where we're going to have the benefit of actual revenue coming in to replenish our treasury and coffers. So I think the ideal case is in the future when we're seeing all of this deal flow, we're able to invest in these deals because we're seeing cash flow from CEO.ca and Digi Geo.
Yeah, and as well, if we build the platform better, more people will come in when those markets come, and the platform will be better for more users. Or advertising revenue will go up that way as well. Same thing with their subscriptions.
Yeah.
So putting the money right now into CEO is what is important for us. And if you look at the balance sheet, it's basically paying for itself.
Yeah, I think there is a little bit of a burn, but CEO.ca, its advertising revenue is a product of the markets, and we put together this chart. James, can you go to the new issuer and equity raised? And this kind of, in a nutshell, just shows you how bad our space is. Like, no one's raising money. If no one's raising money, no one has money to pay for ad space. But so it kind of shows you a testament on how well regarded CEO.ca is, in that people are still paying us money for ads and being able to put to showcase their company on our website. But this kind of shows you how bad it is right now, and maybe it's definitely not because of the commodities, just that everyone's just scared of our space right now.
Yeah, you have the summer lull, you have the uncertainty, the expectation of this commodity super cycle that hasn't come yet. I mean, it's a difficult time. But let's look at the last quarter, super slow quarter in the markets. Some of the historic lowest volumes in TSXV history. We did $300,000 in advertising revenue on CEO. That's up 50% over Q2 last year. Looking at the last 6 months, we've recognized about $1.1 million in advertising revenue. That's up almost 80% from last year, and we've signed $1.8 million worth of advertising contracts, year to date this year. So even with that historic low, and even with a lot of these companies not having that allocated capital to spend for marketing, they're still seeing the value coming to CEO, putting those dollars to work. We're still seeing the check writers on the site. We're still seeing increased user volumes, even with a lot of the users sitting on the sidelines. And I think it's a testament to the site that we're still generating these revenues. So obviously we'll be recognizing those contracts throughout the rest of the year. But tough times.
Yeah. Can you go to chart number 1, James? Okay, so number 1 just shows you a commodity index versus the S&P. And, there's quite the disconnect. But this is for more general commodities versus a larger cap index. So if you go to the one that you just had, James, I think this one just shows you the disconnect between commodity and the actual underlying shares, in that gold's not doing bad. Like, everyone wanted $2,000 gold, and we've been hanging in there. It just hasn't translated into any money into stock price.
No, nothing. And even you look at the majors, those guys, the profit remain the same. Their margins remain about the same that what they had before. So even with $2,000 gold price, gold has been hanging in there, but the profit margins have basically remained the same as before.
Yeah.
So it's hard for everyone. The small guys in the industry, even with gold with this $1,900. No money is coming into the space.
No money is coming into the space. And James, let's look at the last chart here. And nothing is being found. And so we use this chart a lot during the gold spot days. But this just tells you that you need to put a lot more money into the ground to make these discoveries now. And, the cure for, well, it's not low prices in commodities, but we are going to see the inevitable rush when generalist money pour into our little space. And I think this is we have to reiterate where everyone's going to be at the table eventually to be a part of hot private placements and stuff. And we're laying down the foundation and the pipes to do so right now, and that's really important. And reality is I hope we have more time to do so, because we know what we have to do to continually build out our distribution, our news, our content. And, this podcast has been another, channel and avenue to do that as well, to talk up our investments and stuff. But, looking at this chart, something has to give. Like we can't run the world. We can't live in the world that we've been so accustomed to and been spoiled with unless we make these new discoveries.
That's right. And we've been deploying to help out some of those stories as well. And the last quarter, how much did you deploy again? Around $9 million? $9
million into good stories that not everyone is privy to. I think we have a very good network right now, but when everyone has money at the table, like that's where we have to differentiate ourselves. And I've said it how many times in the last 5 minutes how important that narrative and vision is.
And that's what we're building. So I think so far so great. We'll be keep executing on this story and on what we have on CEO.ca, on Digi Geo as well, and getting our names out there with the type of investors we are.
Yeah. How's CEO.ca coming along on the back end?
Yeah, let's talk CEO and we can move into Digi and then maybe some of the investment performance. But, on the CEO side, we've fully finished our new version of CEO 2.0, which we'll be launching this year. We're very excited. We have about 400 people currently still beta testing the last version, but, we've got most of the updates in and are ready to go. CDAR Plus, of course, threw a little bit of a curveball into our CDAR database, but we've got that back up and running, which is nice to see. We have so many cool new tools and features coming to the site that we've been talking about, for the last few months on this podcast and other avenues that we're just unbelievably excited to bring to users. And so the next few months is going to be focused on rolling that out, and then just our backlog of the thousands of ideas and products and tools we have just to push to users. With that regard, we've been spending a lot of time internally looking at the right opportune team for CEO. And we're going to onboard some senior tech talent as well to help drive the development and execution on that side to hit some stronger, stricter time metrics, and making sure that, with that giant user base we have on the site, that we're satiating that with the right tools and resources.
Very cool.
So that's going to be pretty awesome.
Nice.
And a bit on DG side, so the drill hole database is now up and running for some of the beta testers in the major. Some of the majors are interested into it. So, new product that we launched there, but also something very interesting, similar to what S&P has, but more on the cheaper side for more users to use on the database screening for all the different projects in the metal space. So you're looking for a commodity, a specific jurisdiction. Well, we have the screeners for it worldwide. So that's a new product that Digi launched in the last couple of months here.
Very cool. So guys, it looks like things are trucking along. I talk to a lot of people in the space, and while they may be feeling down, I feel pretty good about how we've been operating, our performance in the back operationally on what we're doing in building the company. We've built companies in the past, and it's not all a lot of the stuff that people don't see happen in the background. It could be a slog and a grind sometimes, but no, I feel very optimistic on what we're doing in the background, and very excited when time comes around, our ability to really catch the upside. And I feel very safe as well, because operationally our risk is mitigated by our ability to generate revenue. And I keep on saying that, to be able to spend money and replenish the cash at the same time, it's a pretty good feeling. So I don't like calling us a startup in that regards, because we do have these products that we built into, I wouldn't say businesses yet, but it's showing pretty cool flashes of what it can actually be.
And we're cognizant of the amount of cash we want, and we have. We don't want to go out there in the market and raise more cash. So we're careful with what we're deploying into, as well in the development, and making sure we make revenue for it.
Mm-hmm.
Sure, it's not as flashy as what we did before with Goldspot, but again, less news, but we're still working in the background, making sure everything works well. We're lean and executing well on what we're doing.
Yeah, you know what? And I'd like to give more, I guess, public updates in regards to PRs, I guess, for versus the quarterlies. I know our stakeholders would like that, but at the same time, I don't want to release something just for the sake of releasing something as well, right? We're we're building a real business, and I want to give material updates when we should. So,
Yeah.
you know what? We'll make a point to do that.
No, for sure. I think,
Yeah.
like understood, there's always a frustration from the shareholder side, especially for me, working for the last 15 years for over 500 public companies. I totally recognize the need for more communication. And I think we hear that, and we are working towards that. I think we're going to work on some more regular updates on the CEO and Digi side. And obviously, we've been spending a lot of time on these podcasts sharing about some of our investment strategy and what we're working towards there as well. I mean, that chart you had earlier with the, just the historic lows of the amount of deals and money being raised is incredible. And so obviously, the fact we've deployed $9 million into that, we found some interesting stories that others haven't heard about, and expect to see some results there.
Yeah. So it's nothing until it's something mega.
Exactly, and our time frame for investment is not a 3 months investment.
Oh, no.
And we're looking more a year to a year investment for some of those stories.
Yeah, you have to be patient in this game. All right. So any other updates you'd like to give right now, or
I think for me on that side, we did a good quarterly here, and again, the investment are decent. The market as a whole was down, so we're happy with our performances so far. And CEO.ca and Digi keep generating revenue, so far so good.
Great. Let's keep at it, boys, and we'll see you guys at the next Q. If we don't do a podcast in between them, which we're probably going to do. Vincent, I'll see you at the next quarter.
See you
Okay.
then.
Thank you.